If, let's say, we get a return to the 80s, for example, we get double-digit 10-year yield, would that change your life?
If the 10-year yield went to 80%, I think Bitcoin would probably be worth like $1 million.
All right.
And
there's a headline right there.
yeah, I would happily take that.
Mallers proposes a radical but increasingly plausible solution. Move to a neutral reserve asset, gold or Bitcoin. If the U.S. were to declare that its dollars are redeemable in either of those assets and relinquish its role as the world's reserve currency issuer, the global system could reset. China, for example, has been stockpiling massive amounts of gold.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The reality is, if you really wanted to solve the problem is the currency. The dollar is artificially strong because of its world reserve status. Dollar-based assets are artificially strong because of its world reserve status, meaning we print dollars, we ship them all over the world, countries give us other stuff in return. Now they have all these dollars. They have to do something with the dollars. They cannot reinvest them locally. It'll ruin their export business, so they puke them back into America. So American exceptionalism and a really strong NASDAQ that never goes down has been entirely funded by countries like China. And so if Trump's new mandate, which the American First Investment Policy, which came out in February, Trump said basically take your money and go home, get out of the market. When you saw dollar down, bonds down, stocks down, usually it's stocks down, but bonds do well because it's a flight to safety, right? Dollar down, stocks down, bonds down. What does that mean? That means capital's leaving the country. That means money's leaving America. Trump's mandate to China and other trade partners is get your money out of the country. These things the dollar has to get weaker. Now, Scott Bessent and Trump won't say we want a weaker dollar. What will they say? China needs to strengthen their currency. We need to find some equilibrium. They're using words that, that's not the Trump. The Trump brand isn't weak, right? So he will never say, I need a weaker dollar and we need to question the reserve status of the dollar. He would never say that, but that's what we're talking about. I can fix this problem by saying, we're going back on a gold/Bitcoin standard. All your dollars are redeemable for either gold or Bitcoin, and we're not the world reserve currency anymore. We're going to settle in a neutral reserve asset. Boom. China, I think, if you look at the amount of gold China imported over the last year versus their $1 trillion trade surplus, if an ounce of gold was worth $20,000, China ran budget neutral. So in my opinion, the way to solve this is move back to neutral reserve asset. No one should be the world reserve currency issuer because it's a death curse. There's the Triffin dilemma. You can't have a middle class. You can't manufacture. You run in deficits. You create wealth gaps. You destroy the fabric of your country. And so that's the solution. The question is, can they get away with it in a way that's politically palatable that doesn't cause civil unrest in the country? That's the reality we're living through right now. The one thing Trump did not tariff, gold. The one thing he's made sure to set a strategic reserve for and promote, Bitcoin. And so to me, in so many words, he's saying, stop buying our stocks, stop buying our land, stop buying our real estate, stop artificially strengthening the dollar, stop artificially strengthening assets in this country. By the way, you could buy the 10-year, but we're actually going to allow the banking system to highly lever themselves to solve that problem. I wouldn't own it. You'll be negative in real terms. Buy gold, buy Bitcoin. And then I think at some point in this administration over the next 5 years, we will see a transition where you'll start seeing global trade settled or at least priced in an asset that isn't the dollar.
If, let's say, we get a return to the 80s, for example, we get double-digit 10-year yield, would that change your life?
If the 10-year yield went to 80%, I think Bitcoin would probably be worth like $1 million.
All right.
And
there's a headline right there.
Yeah, I would happily take that. Yeah, I mean, so the most difficult thing about sourcing capital for Bitcoiners to borrow against their Bitcoin is if you understand Bitcoin, you'd rather just own it and get the 60% CAGR than any fixed rate. But we've been able to do that and source that capital. And if the rate goes up, I mean, really at the end of the day, if you have a long-term time horizon, as long as the compound annual growth rate of the asset is over the cost to borrow it, it's mathematically a good idea. Bitcoin is like liquid land. It's digital land. You just deposit into the app and you just take the cash out and immediately put it in your Chase account. Like, I don't need to approve you for anything. It's the quickest way a business could get a multi-million-dollar loan. And so you deposit Bitcoin into the app, you tell me how much cash you want. It's immediately in your Chase account in 7 seconds, and you go live your life. And it's such a mind-boggling product that you can own the best performing thing with. The thing that I think people misunderstand, like a Peter Schiff, is they say Bitcoin has no cash flow.
Yeah.
Right. So like a home equity loan. Yeah, but I can rent it out on Airbnb and pay the interest that way. I would make the argument that every single asset has cash flow. There's two forms of cash flow. There's issuer cash flow, like a bond has cash flow because the issuer is paying you interest, right? But then there's seller cash flow, where Bitcoin has cash flow. I just have to sell it to get the cash. If I bought a Bitcoin for $50 and it's $100,000 now, I could sell it for $100,000. I get $100,000 worth of cash flow. The problem with assets that you own, like the house you live in or Bitcoin, you have to sell the asset to get the cash. What if I can provide you liquidity for your Bitcoin without having to sell it? That's the unlock. And what you realize is the VOC that ran global trade in the 600s did this against their ships and their land. This is how Manhattan was built. Early Manhattan real estate and land, no one sold it when they had a medical emergency or when they wanted to get married. They borrowed against it when they wanted to build a bar on their land. This is what, Tesla put restrictions on how much Elon Musk could borrow against his shares because he doesn't own a pile of dollars. So the way, if you have scarce desirable assets and you can afford to keep them, then find a way to get liquidity by borrowing against them. And Bitcoin has yet to have this market in a reliable way. And these are the type of financial services that I think competition breeds this level of innovation of, like, if you want to add to Bitcoin's utility, this to us at Strike was just like a very obvious way.
Mallers sees these acts as desperate measures to maintain a broken system. The core issue remains: the U.S. economy is unprofitable when viewed as a global business. It consumes more than it produces and depends on others to fund its deficits. Worse, it has compromised its own national security. Outsourcing everything from energy to semiconductors and even defense manufacturing has made the U.S.
The United States, as the world reserve currency issuer, structurally has to operate in what's called a deficit. So if you were to think of the U.S. as a business operating trade, it posts huge losses. It does it unprofitably. So if you have a business that's constantly losing money, how does it afford its bills? Well, it needs people to lend it money to continue to perpetuate its services. So the government actually gets money lent to it in the form of these bonds, treasuries market. And so when you buy a 10-year, you're actually lending money to the government, and they're paying you an interest for the money that you're giving them so that they can continue to finance and operate the U.S. government. And the biggest problem that the U.S. government has right now is that no one's willing to lend it money anymore, right? The deal was, hey, China will allow you guys to operate in this trade surplus, which has now reached $1 trillion annually. You will take then that cash flow. You don't reinvest it back into your economy because it'll strengthen your local currency. What you need to do is buy dollar-based assets. The dollar-based assets we want you to buy are these treasuries. So we're going to allow you to operate in the surplus. We're going to print you this money and give it to you. In return, you're going to lend it back to us. But that deal's long gone. Especially after the 2008 financial crisis, China and other trade partners were like, screw this. I'm not keeping my purchasing power by holding the dollar and buying these treasuries. And so what the US government, and specifically the Treasury Secretary, whether it's Secretary Yellen, now Bessent, it doesn't matter. We're living in a fiscal dominant era where the Treasury has to find a way for the US government to sustain itself and finance itself, given that no one wants to lend to it. So it's an increasing amount of debt. The US government, for all intents and purposes, in practical terms, is broke. It needs someone to lend it money to keep going, and it can't find those lenders. So an example of printing money without actually printing the currency, as you mentioned, is like the change of the supplemental leverage ratio, where banks can use unlimited amounts of leverage to buy bonds, which is lend the government money. So unlimited amounts of leverage, that is establishing buying power with currency that you don't actually have. Like, leverage, if you have unlimited amount of leverage, you're allowed to borrow as much money without any physical constraints, without posting any collateral, without having to prove the work to access the leverage in the first place. So things like treasury buybacks, things like the supplemental leverage ratio, things like bringing Fannie Mae and Freddie Mac out of a government control and as a private business again, these are all sneakier ways to quote unquote print money, which is provide liquidity to the market, specifically to help the treasuries market, specifically to find dollars that will lend to the United States to allow them to continue to finance themselves. Post-World Wars, US took on the world reserve currency issuer. And as we mentioned, within that, you take on deficits and you allow other countries to produce things for you. So you print dollars and you ship those dollars out. In return, you get food, oil, energy, my iPhone, this microphone, probably not produced here in the United States of America. What does that do to your country? Well, one, it disables your ability to produce anything because you've delegated and outsourced making phones, microphones, food, energy, gas, all of that to other trade partners throughout the world. It also destroys your middle class because as everyone else gets a trade surplus and they reinvest that capital back into dollar-based assets, they're buying the stocks, they're buying the real estate, they're buying the farmland. And so asset holders are getting perpetually wealthier through some type of artificial strength in dollar and dollar-based assets because China's trade surplus is being poured right back into the Mag 7, into Manhattan penthouses, into the most pristine farmland. And so the ultra rich are getting wealthier and the ultra poor are exceedingly getting further away from being able to acquire the life that they want to live. So this is bipartisan in America, is that this isn't sustainable. And the real question that no one's saying out loud is being the world reserve currency actually in our interest anymore? And it's gotten so bad that it's become a national security threat. So you can debate whether this has eroded the middle class, whether this has eroded our ability to manufacture stuff. But to look at a stat to say close to 80% of US weapons need China to help produce, now it's a national security threat. Now it doesn't matter what you think about economics. It doesn't matter what you think about the dollar. This is national security. And that's where we are as a country.
Mallers concludes that the central question isn't whether the dollar can remain the reserve currency, it's whether it should. Because at this point, that global privilege has become a domestic liability. And the signs are all pointing to change. Decentralized settlement, neutral assets, and a future where Bitcoin and gold are no longer fringe alternatives, but central pillars of the global system. Please like and subscribe.